Moon Boys staged the comeback of a century with a gargantuan 0.69% pump for Bitcoin. Bitcoin bears are right now cowering in utter disbelief as they are forced to eat their words and squeal like little piggies. But even more bullish news that is being completely overshadowed by the collapse of Sam Bubblebutt Freakin' the Sheets Freed's Exchange FTX. Can the baby bulls continue this absolutely monstrous daily candle and bring on the beginning of the biggest relief rally in history? Or will the Moon Boys end up emasculated and embarrassed like a little baby, being yelled at by his mommy after taking one too many cookies from the cookie jar? Right now, the price of Bitcoin is challenging the most critical level that we've seen in the past year. And after an early morning pump-a-sode to the upside, there in fact seems to be some increased volatility throughout this day, as not all is well in baby bull land. What's even bigger than all of that will literally blow your mind. Make sure I should turn these absolutely time-sensitive alerts. And without any further ado, let's jump into this video with Bitcoin right now setting a completely bananas, completely massive upside candle of nearly 0.5%. Gigantic for Bitcoin. And there are a few other things that I want to start off before we go into the Bitcoin chart. Number one being this. We did actually get a good PPI, which is the producer price index, not the CPI, but this is actually not a bad thing either. Core PPI was unchanged month on month, with PPI overall at about 0.2% versus the 0.4% forecast, which is good. Year-on-year PPI was 8% versus the 8.3% forecast. Again, lower than expected, similar to the CPI. And what this is showing basically is that prices are slowing a little bit in the US, which is the exact intended effect of the rate hikes. So potentially we're seeing some of those effects, which is good. Ultimately, the reason that these rates are being raised is to slow down the economy. And the data that we got today is potentially showing that it might be working. Again, it's very early, but these are good preliminary signs. We could have absolutely had worse numbers, and these are good. Good CPI and good PPI. So again, this leads us into the FOMC meeting, and it's going to be interesting to see if, in fact, which overwhelmingly the odds at this point are being calculated at a 0.5 rate hike or a 50 basis point hike, then okay, that's good. We're maybe heading towards slowing down the interest rate hike so aggressively. Again, it's still very early, so these are just very good preliminary early signs. Now, the stock market was rallying earlier on this, and now, in fact, it is having a little bit more of a down move, as the DXY, completely collapsing, has almost recovered its entire collapse of today only. So the DXY is pumping intraday, but ultimately you can see the DXY is completely getting dumped on. Now, as we said yesterday, we're going to have rallies. I mean, I wouldn't even be surprised to see the DXY even come back to 110, even if the longer term trend is much lower than that, meaning the DXY most likely will bounce at some point. But if it then ultimately gets rejected at, say, maybe this gigantic level around 110 that we failed to hold after spending multiple weeks bouncing here, okay, I think this is going to be very big resistance for the DXY right here. Okay, so say if we do get a pump and see something like that, I think that is a scenario I think that is more likely than anything at this point if the DXY truly is going to remain in a downtrend. Now, if you look at this chart for the DXY, no bias whatsoever, this looks like the beginning of a trend change. It looks like the beginning of the DXY dumping. Now, as you can see here, we've had waves on even the 21-day moving average over the past, over a year. But this is one of the very first significant trend changes we've seen with the DXY. And as you can see here, we have got our very first bearish cross also on the DXY of this entire gigantic ascending broadening wedgie that began really about a year ago. And so for predicting the DXY to continue to have a lower range, or going to head into a lower range and further dumpiness, then this looks very promising for that prospect. But as I just said, and as I said yesterday, we are going to get pumps in the middle of that if that ultimately is the longer term downtrend. Absolutely. So, it's not just going to go straight down. In fact, we've already been going straight down for the past 11 days. So a bounce at some point is completely normal. Will we get a strong one? I don't know. all I'm saying is about the DXY is that this to me looks very much like the DXY is going to see continued dumpage over the next few months. And historically, that bodes well for the crypto market and the stock market as well. And if we take a look also at Bitcoin's chart itself, we see something pretty interesting here. So again, as we talked about these long-term trends for Bitcoin, this long-term trend line, it is still holding at this moment, and we're above the $16,000 range. This probably needs to be solidified a little bit more before we can expect a nice bounce here. But ultimately, I think within the next 7 to 10 days, if there's going to be a strong relief pushing Bitcoin back to the $20,000 level, that's right, 20,000, then I think we actually have a limited window for that. Just my opinion. But again, this all also pretty much requires that we don't see continued more exchanges going insolvent and bankrupt. But let's be honest, even this morning, I saw about 3 more smaller exchanges that also basically said, yeah, we're a little boned. We're not doing too good. We were involved in FTX and we can't get our money, or we're not going to be able to exist much longer, stuff like that. That's going to continue. I don't think it's going to have a huge impact on price unless it's some sort of massive exchange like FTX. There are a lot of smaller exchanges, a lot of smaller lenders, a lot of smaller platforms and cryptos that were tied up in FTX. And I think at this point, everybody realizes that, yeah, we're probably going to see some of those come out as being destroyed and bankrupt over the next few days. And I think that's largely already priced in, unless it's like a bigger exchange, which we have not seen any news of yet. I promise you, if in 2 minutes from now, a big exchange goes on Twitter and says, hey, we're bankrupt, you will see the price move within those 2 minutes. It will happen very fast. So if a big exchange goes down, you will see that reflected in the chart because the chart will completely get dumped on. But it's only if it's an exchange with huge amounts of volume, huge amounts of users like FTX, something for, say, for example, the size of Binance. But absolutely food for thought is that if this trend continues on a longer scale over the next few weeks, that the SPX truly does continue rallying and the DXY has initiated a multi-month, even year-long potential downtrend after a nearly 2-year uptrend for the DXY. If that does happen, crypto will have to sort itself out in terms of, our exchanges going bankrupt and everything, miners being forced to sell because they're simply underwater so much. The market will have to have that sorted out. However, if the DXY and the stock market continue their respective trends, Bitcoin will eventually catch up in a very quick fashion. And it will come out of the blue to some people. People will say, wow, why is Bitcoin pumping so much? Granted, if the SPX continues rising, if the DXY continues crashing. Why is Bitcoin rising so much? And the answer most likely will just be because of that correlation with those assets. And again, Bitcoin is being held down in a spring-loaded fashion right now, even more so because of the fear of continued contagion. Now, in my opinion, I think majority of this will be played out by the end of this week. Majority of the people getting on Twitter and the entities saying that we were involved in FTX and we're not doing so good, I think very likely that we're going to be seeing a lot of this, most of it, come to light over just the next few days, at which point, if the stock market is looking healthier still in a few days, then I see no reason why Bitcoin will not be able to recover a lot of the ground that it's lost, specifically just over the last week because of these fears of contagion. Absolute time-sensitive alerts, and without any further ado, that's